What's going on, everybody? Welcome back for another video. It's your boy Finesse Monster. If you're new, make sure you hit that like button, subscribe to get more content coming from me. And yes, I am still a Mullinaire, even though I am wearing this Neo shirt. I got this a couple years back when I was heavily invested in Neo. So let's get right into the video. Keeping a close eye on the S&P 500, ticker SPX, the overall driver of major equities in the market. It's down almost 1% on the day, and the markets reacted accordingly, pushing a lot of securities down in the market with it, as well as Mullen Automotive stock. And we know there has not been any positivity in the market lately. And I told you guys, if the sentiment is bearish, there is going to be increased crime, illegal activities going on behind the scenes to drive stocks down even more. We are in the oversold zone, and there's a lot of popular equities in the market that just reached their 52-week low. Just to name a few, there's AMD, there's INTC, also Shopify, and as well as Nvidia. Some big names out there that have just recently reached their 52-week low.
Once again, what are we targeting right now in terms of the S&P 500? Where do you think we have to visit?
Well, the latest downdraft took the S&P 500, as you mentioned, down below this 38.15 support level. It's not a confirmed breakdown yet. That would require a couple of weekly closes below because it is such a long-term major level. And unfortunately, if that breakdown is confirmed, the targeted support is just south of 3,200. It doesn't mean it gets there quickly. There is some interim support just north of 3,500. And we actually think that's doable for this year. But thankfully, we are coming into today, today is showing a short-term oversold reading. And part of what you just cited, that AAII data, so sentiment got a bit oversold, our stochastics got a bit oversold, and really just kind of over the broad basis of market internal measures, we saw some oversold indications. So it does collectively support a minor bounce in here. We think it will be fleeting, but at least could stave off that breakdown a little bit longer and give folks a chance to sell at a better price.
You think that would not be something to bet on continuing? You think it would be something to sell into? But if you're scrutinizing the character of a rally, like a lot of people did coming off the June low, what would you be looking for as a sign that momentum was rebuilding to the upside?
Well, I think positive divergences is the easiest and most obvious thing that we'd be looking for, meaning higher lows in our indicators as prices coming off of a lower low. That would be a first step, of course, and really just a loss of downside momentum that looks meaningful. While we have that short-term oversold condition, we don't have an intermediate-term oversold condition, and unfortunately, those intermediate-term gauges that we track are going the wrong way. So we have long-term downside momentum and now also intermediate-term downside momentum. So we do think that bounce would be fleeting, and we think that the bottom will be a process, not an event.
Now, I know some of the bashers out there are making a few of y'all believe that Mullen stock is the only stock that's going down in the market, and that is not the case. In fact, Jim Lebenthal with CNBC expects a rise in the S&P 500 by year end, which in turn will bring the market up and cause stocks to start rising again.
We got some business to take care of right here at the top, and we got a lot to get through early on in our program today. The big news from you today is that you have reduced your S&P 500 target, finally, to 4279 for year end from 4800. Talk me through this, Jimmy.
Yeah, thanks for the chuckle. I actually appreciate it. Look, facts on the ground have changed, right? And they really have changed a lot over the last 7 trading days, starting with those CPI, PPI reports. You know, I thought they were going to come in lighter than expectations, and they didn't. I was wrong on that. And because they came in hotter than expectations, the Fed is now more aggressive than I thought they would be. The facts on the ground have changed. I've got to change with them. 4279, I will point out, still is a healthy return from here to year end. 4800 would have been in a 25% return is just not going to happen. But ultimately, what we're doing here is we're moving the time frame out to reach that 4,800 by about 3 to 6 months. It's not that we're bearish, and I do want to make that point. I'm not bearish on the markets. We know where the stock market is right now. You know how I feel about earnings and where they're going to come in next year. I'll feel a lot better after we start to get those earnings reports in Q3. I may have to change after that happens. We'll see. I'm going to respond to the facts on the ground. But I'm not getting bearish. I know there are people out there who are saying, at least on Twitter, hey, when Lebenthal gets bearish, I'll start buying. Sorry, folks. That's not where we are right now. Still a healthy return from here to year end, and that's predicated on a few things. Strong labor market. We see it continuing today. Lack of a banking crisis. And my belief that notwithstanding what we saw last week, that inflation has peaked and will be convincingly lower by the year end.
Oh, okay. I appreciate very much you.
That's all I got for this one. I hope y'all found value in this video. Be sure to hit that like button, subscribe, and don't feed the fear. I'll catch y'all in the next one. Stay charged up. I'm gone.
Go. Blessed in abundance. Look who raised from the dungeon. Still come through in the clutch. I'm that dime in a dozen. Pulling up clean to the function.